વાત કરવાની છે. 5 સ્ટાર બિઝનેસ ફિનાન્સના ચેરમેન અને એમડી લક્ષ્મીપતિ દીનદયાલન આપણી સાથે જોડાઈ ગયા છે. સર, વેલકમ ટુ ધ શો. ફર્સ્ટ ઓફ ઓલ, congratulations on IPO, and first we would like to know about your business model and how different it is from other microfinance SMEs, MSMEs or NBFCs, and what exactly your business is.
Yeah, good morning. Thank you for having me in the show. Yes, first is how differentiated 5-star from the other lenders. That's a very important point that your viewers have to know. See, India is a land of millions of shopkeepers. It's a millions of self-employed. We are catering to the shopkeepers and the self-employed whom otherwise they have to depend on money lenders for their credit needs. So we don't fight for a file with other NBFCs or other small finance bank. We go to the tier 3 to tier 6 market and take the customers and move the customers from informal lending to the formal lending. That's our mode. That's where 5-star specialized. And this is a fully secured lending. We are not a microfinance lending. We will not be lending on just stocks or machineries, but we'll be lending to the service sector. Predominantly to the service sector. We don't lend on manufacturing side. Most of our books from service sector, that too predominantly people who are involved in the essential service where a common man needs. That is where 5-star targets. So this is how we differentiate ourselves. We lend to the customers who have taken loans from money lenders and bring them to formal credit. 2, it's fully secured loans. And 3, we have been doing it for last 20 years.
Okay, and sir, next question was on loan only. I would like to club 2 questions. Like, you have placed yourself in 1 to 10 lakh rupees loan category, that too completely secured. Isn't it difficult to get security? If yes, what kind of security you get from borrowers? And second point will be on, you give loans to under penetrated segment. Will it kind of, you look at geography expansion for the growth for the same?
This is a fully secured loan. 95% of the security is self-occupied residential property where the applicant and their family members live in. And 5% it can be the commercial security. It can be the shops where they do the business, and some can be the open lands. Yes, I think the first dream of any entrepreneur is to earn a property and build a house on it. So we have done a study with the help of the CRISIL, which has been shown in our DRHP. It exactly shows the kind of sectors or the profile of customers whom we lend, who can provide a security to us. That is a market opportunity of close to 22 trillion rupees in our country. So we don't see any challenge in taking security. That's point number 1. On point number 2, yes, today we are predominantly present in South. Close to 95% of our assets are South-based. In Tamil Nadu, Andhra, Telangana, and Karnataka. These are the 4 major states in South. And we have 5% of our assets in Central India and a bit in North. Yes, we have a contiguous branch expansion, state expansion strategy. So we have moved from Tamil Nadu to Andhra, Telangana, and from Telangana, Karnataka, we have moved to Maharashtra and Madhya Pradesh. And we'll be moving towards Gujarat and Rajasthan in near future. But predominant of our operations, our assets, incomes, everything will come from South for next few years.
Okay, and so next is you're highly capitalized. You wouldn't be raising funds over the next 5 to 10 years. How do you see ROE trajectory from here onwards?
So we see a very strong growth trajectory in our AUM. It will be way higher than what others do. But I can't give any forward-looking statement now. Second is, yes, definitely we are well capitalized. Our capital adequacy is close to 65 to 70% against a regulatory requirement of 15%. So you have a lot of legroom for us from a growth perspective as well as borrowing perspective. So we don't intend to come for capital requirement in near future.
And next is around growth had been impressive. I can see from your financials since March 2020. Margins are superb at all-time high of 10%. But in rising interest rate scenario, do you see any kind of pressure, or it will be continued as it is?
No, we don't see any margin pressure or NIM pressure going forward. Why I'm saying so is our cost of borrowing is substantially reduced. If you refer our RHP, in 2020, our book cost was close to 12%. That has come down to 10.5. And incremental cost in 2020 was around 11.5. That has come to 8.5. So there is a good amount of borrowing cost has come down. We have not yet passed on to our customers. We want to see where this interest rate peak is taking us. Once we reach that point, definitely we will transfer whatever the borrowing benefit that we have got from our lenders to our customers. But I don't see any contraction of NIMs or spreads going forward, because very sweetly positioned. We are able to borrow at 8-ish level because of well capitalized asset quality and a very excellent profitability that we can deliver.
Okay, and you have more than 300 branches, and as you shared, expansion plans as well. So disbursement per branch, if we see, when will be at pre-COVID levels?
So already we are in pre-COVID levels. Pre-COVID, we were growing at close to 90% year on year, one of the fastest growing NBFC in our country. But during COVID, we were growing at 15%. It's not that demand was not there. We want to put the growth on the backside and take the collections on the front side. That is why if you see our worst collections, our worst asset quality was only 1.68%, even during the difficult period of COVID too. So now COVID's all settled. I think from last March onwards, our growth is back. We can see we already from a month-on-month perspective, we are breaking our pre-COVID levels, and we are back to the very good growth trajectory. As I said earlier, we are looking very positive going forward.
Okay, we opt for that, sir. And lastly, what risk do you see from RBI in terms of guidelines that can impact you?
No, I don't see any risk from regulatory perspective. I think more and more they are more supportive to NBFCs. If you see in recent past, they have been seeing NBFC very seriously, because they clearly acknowledge we are the entities who can do the last mile delivery. And I think RBI is supporting NBFC as a sector. And whereas the previous regime was seeing us as a shadow banking, now there is a clear evidence that without NBFC, the last mile delivery cannot happen. That's been recognized by RBI. We don't see any risk from